The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show like we usually do, looking at the DAX on a 4-hour chart. As you can see, we had that really nice pattern yesterday that performed exceedingly well, which is quite nice. But I think the one that we've been really watching very, very closely, of course, is this Footsie Index. And this is going to be a daily chart. You'll be able to see it here. It's really spot on ABCD right at the 1.618. To hit that number exactly at 7,783 and stayed there for 3 days. And then yesterday it had a pretty big break, and today it's having a little bit of a snapback rally. But as long as that high is in, we should be looking at a pretty good correction here in the Footsie Index. That's the way it looks like. From what we're seeing from across the pond. Now, one of the things that I wanted to bring to your attention today is the Bitcoin, because we're breaking down much like we expected. I'm going to post a chart here from one of our really good friends, Kerry Szymanski from Harmonic Edge here in Tucson, Arizona. And Kerry was one of the timers of the digest last year. He was the #1 timer digest for Treasury Bonds, being short. And in the previous year, he was, I think, #2 or #3, right behind Stan Harley for stock indices. And then the year before that, of course, it was, Bill Meridian, who's also our guest. But we'll put this chart up here where Kerry looks at, he does a little bit of Elliott wave. And what you'll notice is the big ABCD pattern that we have here in Bitcoin comes down to right near that 8,000 level, which is very, very interesting. And I think what we want to do is take a look at it from a perspective of patterns. And what we're going to do now is to pull this one up. This comes from one of our friends across the pond, also from the UK, Mr. AS, and I'll put it up here, and we'll see the. This is from Denmark. This is from Johan in Denmark, but this is the real interesting ABCD. You'll remember. We broke out of the 6,000 level in Bitcoin. We went from 6,000 all the way up to almost 20,000, 19,500. And as you can see, it has been following patterns just absolutely beautifully. I mean, it just couldn't be any better than this, folks. And as you can see here, this ABCD pattern measures to just under 9,000. And that's going to be interesting. If you notice those left arrows on the left there, those are basically arrows of where the market has repeated those swings. And you can see how many times it does. This is an absolute textbook of technical analysis, because it shows the patterns repeating over and over again. It shows the ratios. It shows the ABCD. Look at the major swing there, folks. It's 786, 618, 786, 618, 786, 618. And 786, and then what we're looking at now is a potential 786 at a 1.618 expansion, coming in at around the just a little below the 9,000 level. So I think we should pay attention to these Fibonacci numbers. Maybe they have something going for them. I'm not sure, but it certainly looks interesting. That's a really good thing to pay attention to, in my opinion. Now, Kerry was nice enough to. This is part of Kerry's service that he has, his Harmonic Edge service. And he also has he trades professionally for people. But I just wanted to bring this chart up. This is it comes from a CoinDesk, which is one of the reporting things, I believe, for cryptocurrencies. But it shows the retracements in Bitcoin. These are just major corrections from when it started on September of 2010 to January 2018. And you'll notice here that the biggest correction that it had was almost 100%. It got down to 94%, way back in 2010 when it was trading from 17 cents to a penny. And you'll notice that what we're looking at now, the one in yellow, is going to be a 50% decline if so far as where we are. And now what we're looking at now is to see if it's going to be coming down to an area that looks very, very interesting at that 85. It's roughly around 8,500, I believe. But as we get closer, we'll have smaller swings to tell us, where we are. Now, I'm not trading this. I'm just showing you the patterns so that, if it does get to a point where it's tradable, that you have history to be able to see how these things, unfold. Because this is a lot of people are involved in it. That's why you're seeing these patterns the way they are. Because if this were a very thin market, you wouldn't be seeing that. Well, you'll see some of it, but not as accurate as it is right now. So that's what I think is extremely important as we look at this, because it's just repetition and showing you that the fact that the ratios are there, and that's really what we're trying to do. So we'll be watching Bitcoin here. They'll be probably calling its death once it gets below 10,000, and then we'll see. Now the other alternative here is if we break down sharply before that 8,000 level. In other words, if we come below 8,000, this is going to change the scenario somewhat. So let's just wait and see how it unfolds and do one thing at a time as we look at some of these things as they move through here. I wanted to bring one other chart up. This comes from our friends over in Surat, India. And basically, this is a really interesting chart here. We'll probably have to spend a little bit more time on this one. This is from Bryce Gilmore's Wave Trader. And as you know, Bryce and I have been very, very good friends. He's in extremely poor health right now. His eyesight is pretty much all gone. But the Wave Trader back in the old days, this was all color coordinated, and each of these patterns were marked with a rating of 1 to 10. That's what this left box over here is for. And it would rank the rating, and the rating was based on how many ratios were coming together at the same time. So if you had a number 10 there, that was a sign that you had 10 ratio or 10 high probability of ratios coming in at that time. Not 10 ratios, but just a high probability, and based on the strength of those ratios, with 1.618 and 1.27 being the most important, and then of course 1.414 and then some of the others. But that's what it was based on, and it was really a spectacular program. It still works, but unfortunately it's not been kept up to date like we'd like to have seen it. But that led to well, I've known Bryce for so long, but that led to what we have here in the, let's just put this one up, because this is this IWM that we were looking at yesterday. This tries to do the same thing that the Wave Trader does, but you must do it by hand, because you can see the butterfly pattern up at the top there at 159. You can see the ABCD there at 159, but it doesn't put them all together, giving you a rating, and that's what's so important. Now, Tom was just mentioning, the fact that we've had a pretty big break here in the indices so far from yesterday. The Dow has rallied back 78%, the S&P 61%, and the Russell 38.2%. So this is going to be a really key day today. If we make a new high today, it'd be off to the races again. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have Mr. Z from Philly on the line. John, how are you today?
Larry, I'm very well, thank you. Thanks for doing that IWM. That's fascinating. But I would like to ask you if you could pull up the bond futures daily contract and share with me and your listeners what you're seeing right here, please.
Okay. I think the best way to do this, in fact, you'll be able to see it quite easily here. I'll put up the I have the weekly right at my fingertips, and this will be easy to see because you'll notice that we've been down here for about 5 or 6 weeks, and we stopped pretty close to the 78% level at that 149 and change. What we're looking for, John, is a small counter trend rally, probably somewhere between 3 to 4 points to take us up around that 152 is a max, I would believe. We're trading at 150 and change right now is what I'm looking at. But this has a very bearish connotation, as you can see, because of the fact that we had almost a yearly rally that took us only to, well, it was 9 months to take us up to a 382. This is really really bearish. I mean, you can see it in the notes. The notes have already broken down below those lows of 2017.
Great. Thanks for sharing that. I hope that I hope, as you rightly pointed out in the past, hope is not a good thing to have in your mind when it comes to trading. But being prepared anyway to short a bounce should we rally from that 149 low towards 152 or so. Mm-hmm. That's an idea floating in my mind as well, and I'll just wanted to share and repeat something that you and Bill Meridian talked about on Friday, January 5th, when he was last on your show. He went through all his cycle work, and Bill made a very big point of highlighting the cycles for bonds that show from late February into March as being a cyclic time to expect meaningful weakness, a decline phase in the bond market. And here it is, January, mid-January already. Perhaps the fact that we're not falling is because cyclic weakness is at least on Bill's work, not showing up till late February, March. So I'll be prepared should we get that bounce up to 152. Just to follow up, if we break 149 now, given we've had just a feeble bounce, would that be a pattern that you would actually short a breakdown, please?
Well, John, that's some people are very aggressive traders, and I used to be in my younger days, but now, I'm in the 7.5 furlong and an 8 furlong race, so I'm a little less aggressive than I would like to be. But some of the people that I talk to, of course, are very aggressive, and that's what they probably will do. Now, remember, when you have breakouts like that, we're also forced to look at a possibility of a false breakout, and that's what a professional trader will look for, because if he doesn't get any follow-through after the breakout, he's going to be very nervous, and that's where he'll either tighten his stop or reduce some of his position because it's not acting the way that he expected. But I agree that if we get below that 149 level after this little bounce that we've had here in bonds, you could be looking at 142 and possibly even below the 140 handle in these things. Because remember, these things at one time traded at 55, so that's a long way down. I don't think they're going to 55 again, but we could easily see rates back to 4 or even 5% in a 30-year Treasury bond.
Very good. Thanks so much for that. I will. I think I'm going to join that group of people that you referred to. That if we do break the 149.03 to make sure
the ideal
I'm grabbing
situation.
that, and if it doesn't follow through, keep your losses small. So thanks
correct.
very much for that weekly chart. Yeah. That's fascinating.
Yeah, John, one of the things that when you do a breakout, and I know you did some of these in gold because I watched your posts into the den each day, is when the market is really strong trending, much like we have in gold. Once the market breaks through these old resistance levels, the first thing you want to do is to see green lights on your equity, because that means it's working in your right direction. Because if it breaks out and doesn't continue, that's telling you that there was not a lot of follow-through buying at that key level, and that's where you want to get nervous and either exit the position or raise your stop, substantially. So that's, all about risk control, and you don't want to be too greedy. That's the main thing. I have never been one to pyramid, John. I've done okay in the markets, but I've never been a person that pyramids on positions, and I've never done that. I mean, even during my days at Drexel and all through the time frame, the 60, well, it's been 59 years I've been trading. I've never been a pyramider. That's the main thing. But I will tell you this, John, you're going to love this story. I have a friend who actually worked for me for a couple of years. He was doing some work on automatic trading and artificial intelligence, and Ace got a job at Google 4 years ago. So he went up to Google, and he was in the home office and everything, and he was there for a year. And his area of expertise was they were looking at blockchain modeling, 4 years ago. He saw it as a great opportunity, and he was from Bulgaria, but he has dual citizenship, and he went back to Bulgaria and got a couple of investors to go in with him, and they started to get into Bitcoin. This was 4 years ago, if you can believe that. We're talking about 2012, when it was trading at around $5. John, he has made personally, he told me yesterday from Bulgaria as we were chatting on Skype, over $100 million on a $5,000 on a $5,000 investment.
Oh my Lord!
Yeah, and I said, wow, and I forwarded that information to Sarah, and because she knows Ace also, and she was very happy to hear. He's a really nice young man, and he's quite philanthropic. But he just said, I just got lucky, and he said, I just knew it was going to work, so I just kept buying more and buying more and buying more. And I asked him, "Are you still in it?" And he said, "Well," he said, I got out a lot of it at 12,000. And he said, but he still has about 20% left, and he was just going to hold that because now he's been able to take care of just about all of Bulgaria. Anyway,
yes, absolutely. That's the first
big story I've heard. That's the first big story.
Have found his way into that.
Yeah.
That job at Google that introduced him to a world he presumably never saw before.
Yeah, he got paid $250,000 to take this job at Google because he was one of about 5 or 6 people that made it to the finals in this thing, and he got the job and moved from San Diego, and then he, basically since he was there a little over a year and a half, and then he said, I have to do something about this, and it turned out I think he's 31 now, so he's pretty young.
All right, thanks so much.
Hey, thank you, John. God bless, and Happy New Year to you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and market started to, it's still rallying from its overnight, but we did hit the exact 61% retracement on the E-mini S&P up there at that 2793 level. The Dow hit it absolutely spot on to the 78% level, and the Russell, which has been the weakest, if there is such a thing, only made it to the 382. So I think that's very important. Should we get below 2772 today in the S&P, we have some type of a top end. How much it's going to be and how long it's going to last is still up for grabs, but we don't really know that for sure. So let's pay close attention to it. Now, I've had a question about cycles. I posted this chart of the Hang Seng Index. As you can see here, the cycle that I want to focus on is the smaller cycles on the lower left-hand part of the chart. You'll notice that it's a really interesting cycle that bottoms, and if you'll notice the fact that the market will make its high on the right side of the cycle. That's known as high translation to the right. In other words, the cycle comes in real early, or excuse me, really late in the high comes in late in the cycle. Now, if the cycle comes in real early, that makes it left translation, and that is bearish. That is probably the best thing that was in the book by James Hurst, The Profit Magic of Stock Transaction Timing. The summation cycles and some of these other things and nominality and stuff didn't stand the test of time. It did for a couple of years, but for a long period of time, it has not been able to do that. So what I would suggest, and this is what happened to me, is I was looking into the astrology at that time because of well, not at that time, it was about 7 or 8, 10 years later. Because I started with her stuff in 1969 and 70, and then I got into the astro work with Mary Rivers when I was at Drexel. But the difference is that the astrology cycles are very, very dynamic. In other words, they're shifting back and forth as we've seen all the time, whereas Hurst talked about static cycles, and they just don't show up. They did for about 18 months, but and maybe they'll do it again. But right now, that hasn't been the case. So that's why I was focusing on the astro part of these things. And frankly, the best thing that I look at are the new moons and full moons because they are so, very volatile around that time. We've had Al Larson on here showing us some of his work. So that's how I feel about it. But left translations means that the cycle crests early and then it starts down. And right translation means it crests late, has a very short pullback, and then on the way up. So that's really what you'll be watching if you follow the cycle work like that. There's a lot of work on the internet about cycles. Probably the master of this stuff is the Martin Armstrong, I'm almost sure he's in the genius category. I would be surprised if he isn't, but he does a great deal of stuff with that, and I think it's pretty good. But the book, The Profit Magic of Stock Transaction, is a good primer for cycles. That's something that is really good. In fact, Jim Hurst was my customer when I was at Drexel Burnham. I mean, that's how close I was. And he moved up to the Sierra Nevada mountains up in outside of Lake Tahoe is where he was living. He was living in, I believe, Grass Valley in Nevada City area where the Bret Hart Inn was, and he was an engineer and he loved to fish. He certainly didn't like to trade. I think he put 2 trades in his account during the years that I had him as a customer, and then I introduced him to Ed Dobson at Traders Press, and Ed put his book, his cycle work on videos and stuff, and it was available, for quite a few years, the way that they did that. But he was one of the pioneers in cycle research for sure. But the master of that was Edward Dewey from the Foundation for the Study of Cycles. And of course, I really respect the work of Martin Armstrong. He's incredibly good. But there's some other good people out there too, folks. I mean, Chris Caroline is very good. Chris Kaufman out of Seattle is really, really fabulous. Jim Twentyman. I mean, there's some really, really smart guys with cycles, and I think that's I think it's important, but we'll have to wait and see here. Okay, I wanted to take a little section here to talk about cattle. We had Rich Anderson on Tuesday, And we'll put this up because he was looking at cattle. As you can see, we had a really strong move in cattle yesterday, coming off of a perfect 61% retracement on April cattle. Absolutely spot on. It couldn't have been any better than that. And this has a really strong upward bias as long as we stay above that 117.50 level. If we go back below that, you certainly don't want it. That's why if it starts in your favor, you want to put your stop in as close to your break-even point as you can. Those of you that are looking at that IWM that we were watching yesterday, it did exactly what it should have done. It went right up to the 159 level early in the morning, and then, of course, that did sell off. This is the first time we've had a reversal day in the market since when Moses was floating down the Nile in that little basket. So whether it's going to be longer term or not, I'm not really sure. So we'll watch that as we go through. And I wanted to share something from our good friend Cy Monley here at Sylvia's Financial in Chicago. I speak to him every day, and I wanted to bring this chart up. Now, what we're looking at here, this is a chart. It's a spread chart of July, December soybean oil. In other words, your long July soybean oil, short December soybean oil, and the market is almost at full carry. If you'll notice that as you get down here, we've got this huge ABCD. This is a daily chart, folks, so this goes back a long way. We're completing this very large ABCD pattern down here, so you want to be looking for a place to get long soybean oil. That's the way it looks like from the cheap seats here in Tucson, so pay attention to it. And if you'll notice the C leg, you'll see the C leg up there around 60. You can see that perfect Gartley pattern where we had an ABCD Gartley right at the 78% level, right at the 60, and now you're coming down, making an expansion to the downside. This is a really, really good type chart. Let me just show you that same pattern, and you'll be able to see it just a little bit differently here. This is a totally different market, but look what's happened to platinum looking at that same ABCD pattern, folks. Look at platinum down there at 876. Now it's trading $1,000 an ounce. That's what ABC is worth. Hey, we got a caller from Fort Worth, Texas. Roy, are you there?
Yes, sir, Larry. How you doing this morning?
I'm above ground, staying away from open graves, my friend. It's colder than a grave digger's butt down there, isn't it?
It is, 7 degrees.
Wow. What can I do for you?
Listen, about a month ago, we were looking at Bitcoin going down to 8,800 with John Jameson. Is that still a good number, or you think we're bottoming out here?
Oh, yes. No. I still think we've got a really good shot at 8,800. I posted it into the room today, so if you get a chance to take a look. If you don't have it, just give me send my email at larrypesavento@gmail.com, and I'll forward you the chart so you'll be able to see it. But there are a whole bunch of patterns coming together right about 8,500, it looks like, Roy.
Okay. All right. Sounds good. All right. Well, we'll look forward to that, and I'll shoot you an email, Larry. Appreciate it.
I'll be happy to send it out to you, Roy, and Happy New Year to you, my friend.
Same to you. Talk to you later.
Okay. You bet. All right. We'll get on here to the next one we want to be talking about. The fact is, what I should do is put that Bitcoin chart back up here again today, because maybe some folks missed it. We'll bring it up here to take a quick look at it. And we'll take a break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and had a question from Mr. Z in Philadelphia about Ace and his journey into Google. This goes back was it 5 years? 2012. Yeah, it's 5. Wow, it's going to be 6 years soon. But back then, Google used to have competitions to get employees, and what they would do is they would give them tests to. This was all computer stuff because that's the specialty they were looking for. Ace was really good with artificial intelligence. He was good with everything, but he's a really smart young man. He really knows the back and forth of the computer, much like John Jameson does. I don't know if John ever met Ace or not, but what happened was he got down to be 5 people that Google had selected, to take this. They were looking for one person for this one job. And what happened was they got down to 5 of them, and the 5 of them were so good, they hired them all. And that's I didn't ask him if the other 4 were still there or not, but he was there for a couple of years. And then I believe in early 2014, he went out on his own, to do his own thing, which he should have done from the beginning because, it's really, really interesting. Anyway, okay, we'll move on here and talk about some of these markets or not. We did fill one of our gaps yesterday in the Dow Jones. We had about a 250-point swing, I believe, from high to low, close to 300 points. So that was the first time that the tree was shaken a little bit. Whether that's going to continue or not, we'll have to just have to wait and see if it's going to see. Yes, cattle are opening a little bit higher, so that's a good thing. So we'll see. Yes, that's how I met Ace. I met him in California in 2011. I was giving a speech about trading, and he was really interested in trading, and he really liked Fibonacci numbers, so he became my student, and that's how we became friends. And he came over to Tucson a couple of times to visit us. And the real funny part about this, folks, is he was married to you're going to love this story. He is married to a girl from Southern California, and she was really high maintenance. I mean, she was really, it was all about the green. She was interested in the green. Well, when he took the job at Google, she didn't want to move up there. And so she said, nope, that's it. I'm done. Let's move, let's go our separate ways. And she did. And this, my friends, is what we called revenge. Anyway, evidently they're still friends, but he's made it big time. So, and he's a nice guy too. You like to see people that are nice, get the Ace Hardware. Yeah, he owns all of them. No. His real name is he's a Bulgarian name, and Ace is his nickname. Oh gosh, I don't even remember. I've called him Ace so much I can't even remember. But it's a synonym for a shortness of his name. That's really what it is. I don't even know if synonym is the right word. Okay, let's move on to the next one that we're watching here. Let's check these markets to see if we've. We're still selling off a little bit. If we get down below that 27.72, folks, we can easily make 27.53. Markets come down faster than they go up. So remember that. That's always an important fact to look at. So that's another one. Keep an eye on this this soybean oil, this July December soybean spread. Keep an eye on that, because if that starts to turn, that's going to be a really interesting low risk entry. That was the spread that I started with back in early 1975, and it was big Gartley pattern there, same type of ABCD pattern. So we'll watch that as we keep going. I'll keep an eye on it for us just to see if it's moving along pretty good. I'm hoping to get Kerry Szymanski here in Tucson as our guest next week, but Kerry doesn't like to start as early as we do here, so that's going to be a little bit of a problem. And I've not been able to get Shane Smolian back on because he's just flat out too busy. He's doing a great job for everybody, but we'll get him back one of these days, and hopefully that'll be sooner than later. The $64 question in the gold, folks, is are we going to get a correction from this level? We broke $14 yesterday, and we came right back down and tested it again, went right back up to the high again, and we're coming down and testing it again. So I believe that we're going to have some type of a correction to the downside here in the crude oil, but we'll have to just wait and see if it's going. I meant gold, folks. I'm sorry. I've got a little bit of a cold, so bear with me here. I know that's no excuse. But anyway, we'll watch this. Mr. Z was asking us a question about the Treasury bonds this morning, and the 61% retracement comes in about 3/4 of a handle higher, up around 151 and a half, 151.15. So keep an eye on that, because if we get to that point, I believe that would be a beautiful ABCD pattern to be a seller on. So we'll see what's going on with this thing, and we'll be doing what's up. Okay, anyway, I will keep looking at some of these things as we go through here this morning, and so much we've only got another 3 minutes left before the big break. I have one other chart that I wanted to focus on, and that is the euro. I wanted to bring this up to show you. This is where we were yesterday. No, I don't want to do an afternoon show. I don't want to work that hard anymore. Let's just put this up here. Oh, wow. What did I do wrong? There you go. There's the euro over the past several months. We made that 1.618 expansion from the high back in September. Now we're having a little bit of a correction. It's very important in here, folks, because we've had a potential of a really breakdown in that U.S. dollar index. That's it. Asen. Hey, thanks, David. You're correct. His real name is Asen, A-S-E-N, and his nickname is Ace. I can't remember his last name. It's Bulgarian, I can tell you that. But I'm going to have Ace on the show. I spoke with him yesterday, and I didn't ask him about being on the show, but by golly, I think I will. I'll see if I can get him on, and because he sleeps about 3 hours a night, much like President Trump, and so it's we'll see what's happening here. Bob, are you talking about the Kansas City wheat being a bottom yesterday in KC wheat? My answer to that is I believe it was. I was speaking with Simon yesterday, and his people were loading up on wheat and corn, and so I think we're close in these bottoms. But you have to be able to use some risk control. But I do believe that the wheat bottomed. And that's just my opinion, of course, and that's what the pattern is. All I'm waiting for is to make sure that it's made a bottom. Then I'll look for a little pullback, and we'll be able to get a lot of it. We'll see what happens. Okay. Anyway, By the way, someone's mentioning, Maria's talking about the, J.P. Morgan about billions of dollars in Bitcoin. Just because people tell you something doesn't mean it's true. When Jamie Dimon comes out there and tells you that, he thinks it's a, fraud and all this other stuff, boys and girls, if you've ever followed Warren Buffett, trade what you see, not what you hear. Because these people say one thing and do another more often than not, and I mean more often. So I've kept records of some of the things that Warren Buffett has said, and it's exactly the opposite of what you might think, but no one ever calls him on it. So that's that's the main thing that I realized. And one big one was the silver a few years ago, and that's it. Yes, if it seems too good to be true, it most probably is. All right, let's move on here. Oh my gosh, the break is coming up already. Boy, it's a fast show today. Thank God. Got a bad cold. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the chart of the Dow Jones Industrial. We filled the big gap from last Thursday, from Friday, and we had an outside day. In other words, we made a higher high and a lower low. That's what filled the gap. So that really doesn't mean very much, but we haven't seen an outside day in the Dow Jones since way back in late June. So whether this is going to start filling these gaps, I don't know. But, you know, they're down well over 1,000 points. Remember, this was the fastest the Dow has ever moved 1,000 points. I can remember when it hit 1,000 the first time in 1972. We didn't have S&P trading, of course, but the stocks were trading. I was only trading commodities, but, you know, stocks were always in the news because of the Dow Jones. And but, you know, I was doing commodities, and that's pretty much what I still do. Anyway, we'll watch this as these gaps start to be filled. On the $64 question is the high end for yesterday, is that going to be the high for a while? Folks, I don't know the answer to that. All I know is that God is the one that knows, and she doesn't trade anymore. But I want to finish with one really great chart here. This is the Japanese dollar yen. If you'll notice, we hit the absolute spot on low yesterday and we talked about it here on the show at 110.25. The low was 110.19. We rallied 100 pips straight up. Now we're backing off to a little 382 retracement here. So as long as we can stay above 110.25 in the euro, it's got a pretty good chance that that could be an impetus for make the possible dollar index look like possible false breakout. But as of now, that does not look that way. So let's just keep an eye on it and see what happens and live every day in an attitude of gratitude. And may God bless. And I guess I'll be on the show tomorrow if I don't get any worse. So I think that's about it. Any other questions that anybody has? I don't think that's about all I had for today. Yeah, that's about it. I think we're almost finished. And there it is. Thank you, boys and girls.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!